This is going to be part 3 of our discussion on activity-based costing. In previous lecture of mine, I told you about a numerical problem. We tried to understand the activity-based costing with the help of a numerical example. In today's lecture of mine, once again I am going to show you certain calculations, certain questions wherein we shall understand how to implement this activity-based costing in numerical terms, right? So straight away I am coming to the practical problem. This is going to be problem number 2 in the series of our discussion on activity-based costing. So there is a company, there is a leading publisher which is publishing 2 versions of a book. One is named as paperback, another is hardbound, right? So there are 2 types of product with which this leading publisher is dealing. One is paperback and another is hardbound. And the firm is assigning rupees 5 lakh of overhead to both the types of books. So the total amount of overhead which is being assigned to this to both the types of books is rupees 5 lakhs. Apart from that, question is reporting that the overhead comprises of rupees 2 lakh of utilities and rupees 3 lakh for the salary of quality control inspectors. So 3 lakh rupees is basically assigned to the salary of quality control inspectors and rupees 2 lakh is basically dedicated or devoted to this utility aspect, right? So this is the allocation provided by the publisher, by the organization. And then they are offering you some additional data like this, that revenue from paperback comes to be rupees 16 lakh and from hardbound it is rupees 14 lakh. Direct cost was rupees 12 lakh 50,000 from paperback and the same was rupees 6 lakh for hardbound. Production units, number of books which were published under paperback were 5 lakh and under hardbound 3 lakh 50,000 units, and machine hours were 42,500 for paperback and for hardbound it was 7,500. Number of inspections, if we talk about, for paperback it was 2,500 and for hardbound it was 12,500. So these were the basic information provided by the publisher regarding their revenue, their direct costs, their production units, their machine hours and inspections. Initially, when we look at the question, we can identify that there are 2 cost drivers. One is machine hour, another is inspection. So let us see what is there in store for us in this question. Additionally, what they are asking, what they are expecting from us is that we have to compute the overhead cost that should be allocated to each type of textbook, and we have to use appropriate cost driver. Question is telling us that it is being left to us that we have to use appropriate cost drivers for each type of overhead cost. So here this question is different from the previous question, because in the previous question the cost driver was given. Here the cost driver is not given. We have to first determine the cost driver and after that we have to calculate the overhead rate and then eventually allocate it to the product. So appropriate cost drivers we have to identify for each type of overhead cost, and they are further reporting to us is that the firm has used machine hours to allocate overheads in the past. So in the past, what publisher has been doing, that they have been using machine hour rate to allocate the overhead cost in the past. As per past practice, this is what they have been doing. And now their question is, should the publishers stop producing paperback books? Here is a question, that whether they should shut down the production of this paperback variant of their book. This is a question from us. So since they are seeking advice from us, we have to provide an advice, a fair advice with quantified logic. So we shall be doing that also. We shall be calculating the profit on that, and if it would be causing some loss to the company, obviously we shall recommend that yes, you should stop producing. Otherwise we would say yes, no, you should continue. So their question is, should the publishers stop producing the paperback books? Another question is, explain why management was considering this action and what should be its decision. So they are not only asking you to first identify the cost driver, calculate the rate, allocate it to a product, but they are also giving you some decisions in front of you. Certain proposals are there that should the publishers stop producing the paperback books, you have to answer, and then explain why management was considering. If management is considering to stop producing paperback variant of their book, why this decision was being taken by them and what should be their final decision. This is what the question is expecting from us. So this is basically a complete question of decision making, wherein you are not only supposed to do the calculation but also give your valuable suggestion, your comments on this particular question. So let us start solving this question. Let us first do the calculation. So if you look at the variant of these, the product this publisher is dealing with, there are two variants, paperback and hardbound. So what we have done is we have created 4 columns: particulars, paperback, hardbound, and then total. Just to know that what is my total profit or total cost, will be showing what is the total impact. So if you look at the machine hours, whatever information was given in the question, I have tried to summarize it here as a part of our solution to the question. So machine hours were reported for the paperback was 42,500 hours. For hardbound it was 7,500 hours, and when we aggregate them, when we make total of these two, we find a value of 15,000 hours. So this publisher is having a total of 50,000 hours of working. If we look at rate per machine hour, we have to first calculate what is the rate per machine hour. So 2 lakh rupees was the total cost which was assigned to this labor cost, and labor hours we have just calculated, the total labor hour is 50,000. So 2 lakh rupees of total cost divided by 50,000 will give me the rate for this machine hour. So total cost was 2 lakh rupees on account of utility reported in the question, and then 50,000 for 50,000 hours we have worked. So if I divide it, I get a rate per machine hour which is rupees 4. And this rate per machine hour shall remain the same for both the situations, whether you work for paperback or for hardbound. So 4 rupees we have written, and eventually for total also it will remain the same. Now if you ask me how to calculate the utility cost which is to be allocated to paperback, very simple. You have machine hours, you have rate per machine hour, multiply it, 42,500 into rupees 4 will give me the utility cost of rupees 1,70,000 for paperback. For hardbound it is 7,500 into 4, and the value comes to be rupees 30,000 on account of utility cost. And if you ask me for total, very simple, 50,000 hours into 4 which is rupees 2 lakh. So this total value was known to us. What I have done, I have computed rate per machine hour and then allocated this utility cost to both the product, that is both the variants of your product, that is paperback and hardbound. So step 1 is done. So for machine hour, we had machine hours, we have rate machine hours, and we have allocated utility cost to both the products. The same process we shall be following for number of inspections. And if you remember, when we started having a look at this question, I told you that the two possible cost drivers can be machine hour and number of inspections, what you can also call as cost of quality control inspection. And your total overhead was also allocated in 2 parts. So obviously cost drivers are like that. Number of inspections, if we look at the question, we get total number of inspections should be 2,500 for paperback, whereas it was 12,500 inspections for hardbound. Rate per inspection, again we have to calculate. If you remember, in the question it was given that out of total cost of 5 lakh, rupees 3 lakh were allocated to cost of quality control inspection. So 3 lakh rupees is your total cost of quality control inspection. Now you have to divide it by total number of inspections, and total number of inspections, when we club paperback and hardbound together, we get the value of 15,000 inspections. So if you divide 3 lakh rupees by 15,000 inspections, you get a rate per inspection which is rupees 20. So rupees 20 per inspections we are incurring. And if now you ask me what is the cost of quality control inspection for paperback, it is very simple to calculate. We have total number of inspections to be 2,500, multiply it by 20 and we get a value of rupees 50,000 for paperback. The same process we have to follow for hardbound, 12,500 into rupees 20, and it is giving me a value of rupees 2,50,000. If you want total, the total is calculated like 2,50,000 plus 50,000, it comes to be 3 lakh. Now in this way what we have done, we have basically segregated that overhead cost which was having two broad classifications, one in terms of utility cost, another in terms of cost of quality control inspection. And then eventually it has been further segregated to both the product paperback and hardbound. Now so if you ask me what is the total traceable overhead cost for paperback, Very simple to calculate. Utility cost is rupees 1,70,000 and cost of quality control inspection comes to be rupees 50,000. So for paperback I can say that total traceable overhead cost comes to be rupees 2,20,000. The same process we follow for hardbound, rupees 30,000 on account of utility cost and rupees 2,50,000 on account of cost of quality control inspection, and it is giving me a total value of rupees 2,80,000. Just do remember, when you show the calculation like this, your total overhead cost must be equal to what is given in the question, and yes, it is there, rupees 5 lakh. In the column of total, if you look, the total cost comes to be 5 lakh, and likewise the question offered us this value of utility cost to be 2 lakh and cost of quality control to be 3 lakh. The same is being visible here. So on the basis of rate per machine hour and number of inspections, we have allocated this overhead cost, this total overhead cost, to paperback and hardbound variant of the book which is being published by this publisher. I hope it is clear to everyone. Now we shall go for calculating the income as per traditional cost drivers, that is machine hour, because the question categorically mentioned that previously the company, the publisher, has been allocating the cost as per the overhead cost as per on the basis of machine hours. So what they could have done, let us see what publisher might have done previously. They might have shown revenue like this: paperback 16 lakh, hardbound 14 lakh. There is no change. This is exactly a representation of data given in the question. I have not done any calculation for this point. Direct cost is also given in the question, 12,50,000 for paperback, and for hardbound it was rupees 6 lakh. Now when we talk about overheads, here comes the role of the information given in the question, that is traditional cost driver, which was machine hour. So what publisher was doing previously before implementing activity based costing, they were allocating overheads on the basis of machine hours. So we have to first understand what was the total cost, 5 lakh rupees, and what was the total machine hours. Total machine hour was 50,000. So 5 lakh rupees of total overhead cost, when it is divided by 50,000 of total machine hours, it gives me a machine hour rate of rupees 10, right? So once I have got this machine 10 rupees of per machine hour which we have to incur, we can very easily allocate the overhead cost between the two variants of a product, that is called paperback and hardbound. What we need is, we only need the machine hours. So for paperback the total machine hour was 42,500. The moment you multiply it with the machine hour rate of rupees 10, you get a value of rupees 4,25,000. And the same is being done in case of hardbound, 7,500 machine hours into rupees 10, it is giving me a value of rupees 75,000. So this is what this publisher has been doing previously. And if you look at the total cost, what you have to do, we have to aggregate direct cost and overheads. And for paperback, if I aggregate both of them, 12,50,000 plus 4,25,000, I get a value of rupees 16,75,000. Now mind here, my dear learners, when you calculate the total cost of rupees 16,75,000, you have to compare it with the corresponding revenue. And if you look at the revenue of this variant of product, it comes to be 16 lakh. So it means your margin is in negative. The publisher must have calculated it like this, and then they have reached to the margin of rupees 75,000 negative. Rather, I would say it is a loss. Whereas for hardbound, when we do the calculation, it is fetching us a profit of 7,25,000. So here we found an answer to the second question of this numerical problem, wherein the question was asking that what led publisher to reach to this conclusion that whether we should drop this paperback variant of their book or not. So this must have been the reason, since these overheads might have been allocated to these two variants of product on the basis of traditional cost driver, that is machine hour, and they might have seen this loss of rupees 75,000 from paperback. So they must have thought of dropping out this variant of their product, and since hardbound is giving them the profit of rupees 7,25,000, it's better to concentrate on that, right? So the reason is very clear. Here in this segment of our solution, what we have done, we have simply tried to show the calculation what the publisher might have done previously, right? Now, as per traditional cost driver, machine hours, since paperback is not profitable, as it has resulted into a loss of rupees 75,000. So you can say that this must have led to this decision by publisher that we should drop this idea of publishing paperback. Now the same calculation, same components are there, and we shall be doing the calculation as per activity based costing, and then we'll see whether the decision should change or what decision the management should take, that we shall be recommending on the basis of solution. So if you look at the calculation, revenue remains the same, 16 lakh and 14 lakh for both the variant, direct cost also remains the same, but here the overhead is coming from our activity based costing sheet, which we have prepared at the very outset, wherein when we did the calculation, we found the overhead allocation, traceable overhead to paperback, it was rupees 2,20,000, and for hardbound it was rupees 2,80,000. This is coming from our calculation sheet which we have done at the very outset. So overhead cost come to be rupees 2,20,000 for paperback, and for this hardbound it comes to be 2,80,000. And this overhead allocation is based on those two drivers, one is utility, another is inspection. So if we calculate the total cost now, the situation is different, entirely different. Here my cost for paperback is 14,70,000, whereas for hardbound it is rupees 8,80,000. So if you ask me for margin, now the paperback is showing me a margin of rupees 1,30,000 positive, wherein previously if we were using the traditional cost driver of machine hour, it was showing us a loss of rupees 75,000. So here it is it is giving us a margin of rupees 1,30,000. So obviously if you ask me for decision, I would say that publisher should not discontinue this publication of paperback books, because it is giving them the profit, and hardbound is giving them a profit of rupees 5,20,000. So my dear learner, now if you remember, this is what I was discussing at the very outset, that sometimes the misrepresentation or miscalculation or misallocation of cost may result into a wrong decision. What you assume on the basis of quantified logic, when you were allocating it on the basis of traditional cost driver, that is machine hour, you were thinking that you are taking a right decision. Publisher was taking a right decision, that paperback is giving me a loss of, causing me a loss of 75,000, so why to continue with that? Wherein the reality is different. Reality is entirely different. When you were allocating those overheads in relation to their usage by a particular product, the situation is different. Yes, it is of course visible that the profit of hardbound has reduced. The reason is very simple, because it was only because of the increased profit of hardbound was visible only because of the increased allocation of overhead cost to paperback. So this allocation is very important. This is what you must be observing here in this solution, that on the basis of in activity based costing, when you allocate the cost on the basis of activity, this is the result in front of us. So what should be our decision, what should be our recommendation to the management? Very simple, as per activity based costing, the firm must continue producing paperbacks because it is generating a profit of rupees 1,30,000. So we have answered all three questions. First was what should be the cost traceable to the product on the basis of activity, that we have done. What led company to take a decision of to think of discontinuing with paperback, that also we have understood. And here what company should do, whether they should continue or they should drop producing paperbacks. So we have given a recommendation on the basis of the fact that it is generating a profit of rupees 1,30,000. So company should go for continuing or producing paperbacks. So this was basically a question, a problem showing this activity based costing from that perspective. Now let us have a look at another question, practical problem number 3 on ABC. Very small question it is. A company manufacturing two products, it is furnishing you some data like this. It is giving you for two products, namely A and B, annual output is given, total machine hour is given, total number of purchase orders is given, and total number of setups are given. So if you look at the cost drivers, very simple, there are three cost drivers visible: machine hour, purchase order, and number of setups. Now what question is asking? Question is providing you annual overheads, which is volume related activity cost rupees 5,50,000. They have reported setup related cost to be 8,20,000 and purchase related cost to be 6,18,000. What they are expecting from us? We have to calculate the cost per unit of each product A and B based on what? traditional method of charging overheads, another is activity based costing method. So it will actually help you in understanding the difference between the two. So let us quickly solve this question on the basis of traditional method of charging overheads. Volume related activity cost, I have simply represented all three costs. Whatever was given in the question, volume related activity cost 5,50,000, setup related cost 8,20,000 and purchase related cost 6,18,000. When you make sum total of these three, you find a total cost of 19,88,000. And if we have to allocate this on the basis of machine hour, very simple. We have to first find what is my total machine hour. So for both the products A and B, total machine hour comes to be 20,000 plus 1,20,000 hours, 1,40,000 total hours. So if you ask me how to calculate total cost per hour, very simple. Total cost is here, total hours are here. You have to simply put the value, get the answer. 19,88,000 divided by 1,40,000 hours, and it is giving me a rate of rupees 14.20. This is under traditional method of charging overhead, right? So now we shall move on to finding the cost per unit of product A. If I have to calculate, very simple. Since the total number of units were 5,000 for A, we have to first understand 20,000 into 4.20. What is 20,000? 20,000 is total machine hours for A, and total cost per hour was, combined cost was 14.20. So 20,000 into 14.20. Most of the times what students are doing, they are committing a mistake. They multiply machine hour and the total cost per hour, and they feel that value has come, but that is the wrong way to do the calculation, cause it is, this total cost per hour is a combined cost 14.20. So it has to be divided in proportion of that units which you are producing. For product A, it is 5,000. So it is divided by 5,000 units, and the value comes to be rupees 56.80. So cost per unit of product A as per traditional method comes to be 56.80. The same process we shall follow for product B, and it is giving me a value of rupees 28.40, right? So the process is same. 1,20,000 is total machine hour. It is multiplied by combined cost 14.20, and then in the ratio of their product, that is 60,000 units you have produced, so you have calculated the cost comes to be rupees 28.40. Now when we are charging overhead as per activity based costing method, what will happen? So previously I have told you how to allocate it on the basis of traditional method. Now we are switching to activity based costing. So we have to first go as per volume related activity, setup related cost and purchase related cost, because these three are going to be our cost drivers. So very simple, if I have to calculate the value related activity cost per machine hour, very simple, we have to first find what is my volume related cost, which is 5,50,000. What is my total machine hour? 1,40,000. Divide the total cost by machine hour, value comes to be rupees 3.9286. The same process for setup cost. 8,20,000 is your total setup cost, divided by total number of setups. We have total number of setups to be 64. It is giving me a cost of rupees 12,812.50. Same process for purchase related cost. Total cost is 6,18,000 divided by total number of purchase orders, which comes to be 160 plus 384, 544. So this is my purchase related cost. So my dear learners, what we are doing, we are basically calculating the activity rate, or you can say for all three cost drivers we are finding the rate. So volume related activity cost per machine hour, setup cost per setup and purchase related cost per purchase order. So your purchase order, your setup and your machine hour, these three are your cost drivers. So once we have calculated this rate, it is very simple for you to allocate or trace those overheads to your particular product, that is A and B. So I hope this segment of solution is clear to you, that we have the way we have to calculate the rate. Once you know how to calculate the rate, second part or the next part is very easy for you to implement. So calculation of rate is very significant. So you must know, and you must provide working like this in your examination problem, so that the examiner should have a clarity that student has not only mentioned the volume related cost but also total machine hour, and what is my numerator, what is my denominator, and the way this value has been calculated. Now we shall be calculating the cost per unit of product. So we have to prepare a format like this: particulars, cost drivers, and for if you have two products, here we have two products. For both the products we are having two columns. So first we'll start with the first cost driver, that is machine hour. What is that cost which is related to this? That is volume related cost. So we are having a total hours of 20,000 for A, and the cost we have just calculated previously. So 3.9286 we'll multiply it with the 20,000 hours to arrive at this value of 78,572. The same process shall be implemented for product B also. I am not repeating that. You can see the calculation, 1,20,000 hours into volume related cost rate. Now we shall move on to the second cost driver, which is number of setups. So here the corresponding cost is setup related cost. So it is calculated like this: 20 setups into per setup cost we have computed previously, multiply, and it is giving us the value of 256,250. The same process we shall follow for product B. For third one we have purchase related cost, number of purchase orders we have. So number of orders multiplied by rate, it is giving us the value. And in this way, if you segregate all three costs, that is setup related, volume related and purchase related cost for both the products, you will find the total cost. And since we have to report the cost per unit, very simple it is: total cost divided by number of units you have produced. For product A we have produced 5,000 units, and for B we have produced 60,000 units. So my dear learners, what I have tried to showcase in front of you is how to identify the cost driver. In this question we have identified the cost driver, and then we have calculated the cost per unit as per both the methods, traditional as well as the specific, that is activity based costing. So with this I am ending today's lecture. I hope you must have understood and enjoyed today's lecture of mine. Thank you so much.